How's it going, guys? It's Rafi from Beyond the Huddle, and welcome to this week's Bitcoin forecast. As always, I'll get started with the SMI. That's the Smart Money Sentiment Indicator, to show you guys what the spot market is looking like, whether they're accumulating or distributing, and that's using exchange market data. And then we'll move on to the CME contract for Bitcoin, so we can take a look at the large players. Those are the asset managers and how they've been adding or decreasing their long or short positions. And then we'll finally wrap it up with some price action and volume using our two indicators to see what the bias and what potential support or resistance levels might be around. So with that being said, let's get started. Okay, so getting started with the SMI indicator, here we're going to take a look at the long-term sentiment, and we basically want to see what the long-term players have been, how they're currently positioned in the market, and that will tell us what the sentiment and bias should be for the time being. So as you can see right here, last time, and remember, the one that we're really interested in to make decisions is a strong accumulation. So last time we saw that was back here at around I would say $35,000, and that led to that really nice rally up to the 43K, 45K, somewhere around there. And then we had that distribution, which led to the aggressive sell-off. But what I haven't seen ever since then is the strong accumulation for these long-term players. So there's been some accumulation, you can see in the green bars here, and that's pretty nice. Obviously, you can see right here how the price kind of bounces up and down when it's accumulating, and then you finally came back to the discount of where the strong accumulation came from. So that's like a nice pivot zone that you want to use, right? So that's your anchor. So when you see these strong accumulation, you want to make sure those keep getting respected, and you should see, again, because we didn't see any more strong accumulation on the way up or the way down, you want to anchor your price leg from that point, and then that means that once it comes back down here, again, I would much rather have seen strong accumulation. I did not see that. So it wasn't really, something that I was really interested in. But right now what we're getting is this, neutral / distribution in prices for the long-term players. That's not something you want to see, as Bitcoin has been, consolidating between the monthly value area high and the monthly value area low ever since January. And that's something I spoke about in last week's video. So very, very interesting stuff there. Taking a look here at the short-term players for the market exchange data. Again, much the same thing. You can see how the strong accumulation, that was your anchor point. The high was seen by this distribution, and then as you came down, you didn't see any more strong accumulation. So you have to anchor off this. And then when you come down here, again, no accumulation, so that's not really my trigger point. If anything, right now is one of my triggers where I would be looking for a sell signal, based on whatever it is that you guys use. We like to use value areas and a couple other things that we teach in the premium group. But again, if you want to use your stochastic divergences or whatever supply zones, whatever it is that you guys use, right now is the time to be doing so, because it's telling us that the short-term and the long-term players, although the long-term players are a little bit more neutral, they keep switching back and forth, and we'll see real soon when the new one comes in. This updates every 8 hours for us. This right here has been telling us that the market has been consistently selling into this consolidation right here. Okay, so maybe tomorrow we go hit 42,000 one more time and then fall. We will talk about some price levels that I have in mind, and I'll actually use some daily models for you guys today in today's video. I haven't really chosen the daily models before for my videos, and that's because it's too short term. But I think because we're at the distribution, that would be a good time to be pulling those out. And by the way, that's the same thing I did back here at the high. Again, using your daily models, you would have seen there was a break of the value area low somewhere around here, and then that led to the expansion. Remember, when you fall below these value areas, that's why it's so important to use this indicator that we have. When you fall below those value areas, you start to trend, because there's very thin liquidity for that time frame. Okay, so if you can figure out where that imbalance in volume is, and then once you exit that to the downside, you're going to have aggressive prices. If you exit it to the top side, you're going to have aggressive prices to the upside. Again, the aggressive price to the upside led to this rally, and then the aggressive price to the downside led to this drop. Okay, so very, very important stuff for you guys to keep in mind. And by the way, if you want to have access to this community, this right here, you have the free stuff or the premium. Feel free to check in the description below. We're running a 7-day free trial for the indicators, but you can always come into the community for free if you do not feel like upgrading and get our weekly videos and our extra concepts and stuff. So with that being said, guys, again, distribution hit in the market for the short-term players. They're being consistently distributing, and the long-term players, although they are neutral currently, they did distribute at this high, and that led to this slight sell-off. So with that being said, let's move on to the COT, and then we can get moving on with the price action to show you guys these daily models and how that might play out there. Okay guys, so moving on here to the COT part of the video, we're going to take a look at the CME, and we can see that the asset managers, those are the institutional players, they increased their longs by 31 contracts to a total of 5,893, and then they also increased their shorts by 82 contracts to a total of 925. Now that makes a total of 86.4% long. So as you can see, for the past few weeks, the longs have been, trending downwards, as you can see right here. But again, nothing to be concerned about until we start to break below this. And when and if that does happen, which I think obviously eventually it will, the key would be how does the shorts look? Are they still above the average? And then we take a look at, so you can see right now, right, the shorts are above the average. That's not what we want to see, but, using like a little bit of, TA, again, I always find it funny how the TA on this does work. You can see right here, that's a nice little premium. So that's an area maybe where we would be expecting the shorts to, pull back, because if you think about it, this is just like an imbalance, right? So basically the market players, they decrease their shorts very aggressively, and then if they start to retrace, then one target would have been above the average, and then because they still keep going, then the next target would be back to the where the move originated from, which would be the 78 to the 61. That's our premium sell right there. But yeah, again, we would be looking at the shorts, then we would go ahead and look at the longs. The longs, beautiful, they still are above the average, so there's nothing to worry about there. And then finally, we would then go ahead and take a look at the net position. Net position, it mostly reflects the longs because they are such an overwhelming percentage of the open interest. So you can see right there that they are above the average as well. So that's all I have to say about the COT. Again, not much there. The only thing is I do need to see these shorts go below the average, because again, you already saw what happened here in late October when they did go above the average, and until we hit this weekly demand right here, right at the discount, is when they, and that was also the yearly POC, by the way, that was when they started to reduce those shorts. So this would be great if tomorrow, so remember tomorrow at 3:30 p.m. is when the CFTC website will come out with the new positions. We will be sure to update you guys on Discord. Misha is always on top of that. It'll be a very big day to see if during this rally that we're seeing right here on the week, they then go ahead and reduce some of those positions. So with that being said, let's move on to the price. Again, not much to talk about here. They're still not long, and they're still slightly above the average, but we are hopeful and looking forward to that changing very, very soon. So okay guys, so getting started here with the price action and volume part of the video. I want you guys to remember, every time you watch my videos and any analysis that I do, is that I'm trying to predict how the candles are going to develop. Okay, now depending which value area I'm looking at, that's the candle that I'm going to try to predict. Because I'm a swing trader, I care about the quarterly, the yearly, quarterly, and monthlies, and then I use my weeklies, 3-day, and dailies in order to get in and out of trades. For someone who's a shorter term trader, they would be like an intraday trader or scalper. You'd be interested in a daily model and then a session model. Okay, so we have those two that we use in order to fulfill whatever type of trading we're trying to do at that moment in time. So my biggest question every single week is, how is this candle going to close, bullish or bearish? So remember, the way you do that is you look at your USDT bias. Okay, so looking at our USDT bias on a 4-hour chart here, you can see that as long as price is above the level, you're expecting the candle to close bullish. For the green, that's the weekly, and the purple, that's the monthly candle. Remember, this has nothing to do with how far that candle will go, okay? In order to see how far that candle will go, you have to look at that time frame's value area, okay? So for the monthly, let me double click on this, and then let me not extend it. So for the monthly, that would be these blue lines right here. And then for the weekly, let me double click on this and not extend it, just so you guys can see exactly when it starts and when it ends. That would be this green line right here. And of course, the white one, for me, that's my quarterly value area, okay? So when we zoom out a little bit here, you can see how every single time you try to pop your head above the previous month's value area high, you keep rejecting, right? And then if you reject off the value area high, you're targeting the POC and the value area low. Well, we never got to the value area low. We actually stopped at the POC. And the question you have to ask yourself is, how would I have known I was going to stop there? Well, again, one, the USDT bias level, and two, my daily and weekly models and 3-day models and so on and so forth, okay? And how you use them, which one you use is up to you. But today, I want to focus on the value area low that we hit as the week opened, okay? So the question you have to ask yourself is, at that moment in time, we were below the monthly, below the weekly. Why should I expect this to stop right here? Well, when you pull up your daily, so let's go ahead and bring that up. Let's go to a 1-hour chart. When you bring up your daily models, and then you're going to go back, so I'm going to add, you can see right here, this dotted red lines. I'm going to add so I can bring back as many models as I need, 4 of them, there it is. So essentially, this large move right here got us to hit, this is right as the week was ending, it got us to hit the weekly value area low. So then when the new week opened, you bounced right off of it, and now you were waiting for what? You needed to stop bear trending of yesterday's value area. Look at that right there. So the moment that you went above that value area low on Monday, you were a buyer, right? And now where you're a buyer to, the previous day's value area high, which is this red dotted line, and then the previous week's value area high. Now, the key here is that as the days move on, then you want to stop using that value area and then use the new one of the day that just closed, right? So when you go straight up right here, hit the previous week's value area high, you have to see how it's going to react, and then that day closes. So now Monday is closed, right? And then Tuesday opens right here, right? And then on Tuesday, you're going to use Monday's value area low. Look at that. Boom. You hit it right there. And then you find it as support. Now, remember, you had already bounced off previous week's value area low. So that's your quote-unquote anchor, right? And now you're moving higher. This is all happening while the SMI is accumulation, okay, guys? So it's very, very important for you guys to remember. And this is how you start to piece things together, and it starts to look really, really cool. So then on Tuesday, right here, you use Monday's value area low as support right here. So that's a nice little buy right there. And then you're targeting what? Monday's value area high, and then which is the USDT bias, by the way, right? The weekly USDT bias, and then the previous week's value area high. So obviously you hit the previous week's value high right there. You reject off of it. And then Tuesday closes. So then when Tuesday closes, look what happens. You do end up going above previous week's high, right? So on Wednesday, there's a lot of messing around because of the interest rates and all that. So you had a nice move higher. I thought we were going to, break out from there. Why? One, because we were daily bull trending, and two, we were weekly bull trending, and we were above our weekly USDT bias level, but that did not happen. So then we had a nice aggressive 4% move lower, and then that seemed to find support where, right? Well, it found support at the USDT bias levels, and then from there we were off to the races. So that brings us to how it looks today, right? So remember, there is some very strong some distribution here. So you can see there's some strong distribution that has started since a little bit yesterday and then into today. And now you want to start asking yourself, well, is this going to go lower or not? So remember, there's a few different things. For someone like me who's a swing trader, the only thing I care about is what's my weekly value and what's my weekly USDT bias. But for someone who's a shorter term trader that wants to protect their profits and their capital and is not okay with losing about 6 or 5%, what you would have to do is look at your daily value areas, and then you would have these two marked out right here, right? So you would have this one, and then you would have this one, and then you're telling yourself, if today we cannot go above yesterday's value area, then I'm going to consolidate, and then we're going to make our way down from that value area high, and we're already down almost 1% to what? The POC. We already hit that earlier today. And then next, you're going to make your way to the value area low. And here's the kicker. If you break below that value area low, then you're bear trending, and then you would expect this to get broken, right? So as long as those daily models keep going bearish, you expect the flow to switch to USDT bias bearish, the monthly USDT bias bearish, and then you go bearish, okay? And then that would fulfill the distribution right here. So that's pretty much how you would want to think about it. And I told you guys that this is exactly what happened a few days ago when we hit that high, and look at that right there, right? First things first, right here, you can see that the distribution, the SMI, right, the sentiment for the market exchange, so the long-term and the short-term players were telling you, hey, we're selling, right? So if they're telling you they're selling, right, then look at this. The minute that day opens, right, so you know the day opens right here, it goes straight down, right? So as this is a 1 hour candle, as this 5-minute candle, 30-minute candle, whatever time frame you trade candle is moving lower, let's just say that you trade at the end of the 1 hour, you get out. And look at that. You save yourself 5%, 6%, as much as almost 8% right there. If you get out late, and then you wait for the value, a little bear trend. Obviously, you can get out at the value or high if you're really certain that the distribution is going to cause a high. Like right now, right? We're in a distribution. You can do two different ways. You can either wait. So it's already 4 o'clock. The market closes at 8 o'clock. So in 4 hours, right? In 4 hours, this profile right here. So you can see right here, this profile will be the previous day's profile, right? So tomorrow, this is yesterday's profile, the one that's currently developing today. So that means that if we already closed bear trending, you need to get out because the market will be dropping, okay? So I hope this gets you guys to understand a little bit more, like the different ways you guys can take advantage of these moves. You don't just have to wait for the USDT bias level to get broken to the downside. I just think that's the easiest if you're not looking to, intraday trade or short-term trade or do any of that kind of fancy stuff. This is definitely a great and viable strategy. You guys have seen us, play with this week in and week out and be very profitable. But yeah, there you have it. I just wanted to show you guys some intraday models. But again, for me, for my account, until I start and decide to start short-term and leverage trading, I'm going to just use these weekly models. So for me, I would be waiting for this value high to get broken to the downside, and then the USDT bias level. If that gets broken to the downside, then I'm targeting the weekly value low, and then so on and so forth. I'll give you guys some more targets as we hit them if we can break below these two levels right here. So with that being said, guys, I hope you find some value in this. Again, I would be watching out for this, depending how these models close, the value high and the value low, because that will tell you and it'll confirm this distribution is happening here if you're going to see some aggressive moves to the downside or not. Okay, so with that being said, I'll talk to you guys soon. Peace.